Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I came across this company that we're going to talk about today recently, and I'm really excited to share this with you guys because it is one of those companies that has the potential to become the next big thing. But of course, there's always a bit of a danger when we say those things, and it's still a small, basically growing company, but it is growing quite fast. And I really like the product. I came across this company about 7-8 months ago, and then since then I've been planning to look into it a bit more detail so I can share with the community. I haven't done it, and then guess what? Since then it's actually gone up about 25%, which is absolutely ridiculous. So I'm going to share this with you guys today and tell you everything you need to know about this company and so on. So, but before we do that, as always, please, if you can do me a couple of things, okay, help me by, of course, by making this channel the best that it can be. By actually, of course, the first thing I want you to do is like the video, subscribe to the channel if you haven't done it already. There's over 50% or 40 something percent or whatever of you guys that watch the videos regularly, but you're not subscribed. So please do me a favor and subscribe to the channel if you can. Okay, this is if you can be just £5, less than £5 a month, which will cost you about 15p per day. You get access to the real-time buys and sales. You get the family portfolio. Okay, so updates on the family portfolio. You get access to the Discord, which is quite important. That for me is the most important part of all of these things. You get access to all of these things as a kind of one-off, but the Discord is actually quite nice because you've got a lot of brothers who are sharing genuinely good practices. They basically share what they're buying, what they're selling, why they're buying, why they're selling, all the news that's happening and so on. So if you can join us on that, basically on the Patreon account, that will genuinely help the channel, inshallah. Now, before we move on, we're going to talk about the fear and greed. As you can see here, we are now 38. Okay, so this means we are, hopefully, we'll come back down to at least extreme greed and fear by the time we get to, say, July and so on. The reason I said that is because the stocks will come down. A lot of people will be fearful. A lot of people will start selling it. Hopefully, we'll see a bit of correction and buy high quality businesses to basically at the discounted prices. And inshallah, I'm going to continue finding some good companies that we can invest in, inshallah. As always, it's not financial advice, but of course do your research. But inshallah, we would, I will share with everything with you guys. It wasn't not long ago we were around hovering between greed and extreme greed. So right now we're in the opposite. So let's see what happens in the next few weeks. Right, so the company we're going to talk about today is called Unveiling AG. You probably have seen, if you are in your, I don't know, 20s, 30s, whatever, you probably have seen some of their products already, and this is what they look like. Okay, so if you go to their website and you see, if you've ever seen, okay, that little sign there, okay, that it means basically is on cloud. So on cloud is basically the best trainers apparently out there right now. So I've got a friend of mine who actually basically bought the product recently, and he said to me they are by far the most comfortable shoes he's actually ever wore. So it's really interesting to hear that. They sell, of course, other things, but that's the main things, and they really look nice. I'm actually planning to check out basically one of them soon, but they're not cheap at all. You're looking about $160 per share, 170, 180, 150, and in the UK you can buy them in JD and they cost you £150, okay, £160 depending on which one you're looking at. So they look interesting, they really do. I'm gonna try and go and see what they like. I'm gonna check that out, inshallah. But of course you have to make sure that the reason we came here is not just for the product itself. We need to understand what the company does, and mainly is these basically trainers, which is quite nice, but we also want to check the financial of the business and see if it's actually a good business. I believe basically the company is based in Zurich, Switzerland, so it's been around basically just since I think 2010 or so. So it's been around for quite some time now. It's part of the consumer discretionary, and I believe it's taken market share from larger footwear companies like Nike, for example, Adidas, Under Armour, and so on. So right now they are trendy. Well, it's not trending yet, but they are getting there. There's a lot of young people that actually buying their product and so on. So they haven't exploded yet. So I'm waiting for that opportunity. And since I actually discovered this company and did a little bit of research at the time, it's gone up 25%. I wish I'd shared with you guys a few weeks ago. But Anyway, it doesn't matter. What we want to see is if it's actually good business overall. And currently trading $42 per share. It has an EPS, so it has a positive, okay, almost $1, a market cap of $13 billion. So it's not a huge company, but it's not tiny either. They have, of course, narrow economic moat because they are quite small. Still, they haven't developed that moat yet, and it's quite difficult for this type of business to develop a wide moat anyway. Beta is quite high, so that means anything above 1, anything below 1 means it's not too volatile. Above 1, that means it can literally swing, I don't know, 5-10% each day either way. So you have to be careful with that. Current PE 96 and the forward PE is about 42. Of course, the 5-year average is not there, but price to free cash flow about 42 as well. The sector is about 14 right now, and the S&P 500 is about 24. So based on this, it seems a little bit too expensive right now, okay? But remember, sometimes when the companies are growing very high, it is, of course, for that reason you have to pay higher multiples for these companies, and a lot of investors will pay higher multiples for these companies. Now, when it comes to free cash flow here, we're looking at basically about 267 million, free cash flow yield of 3.5, and free cash flow margin of about 14%, which is really, really good. Profit margin, in terms of profit and management effectiveness, we're looking at profit margin about 6.8, about 7%, operating margin almost 10%, return on equity about 12%, which is really good, okay? And when it comes to the total return in the last 1 year, okay, almost to 40%. They don't, of course, pay any dividends, so that's all capital appreciation. But that's for 1 year. Return on invested capital, 12%, which is decent. Return on in the revenue growth of the basic last 5 years, 63%. And the EPS, basically, I couldn't find it for EPS because I don't think they were profitable up until basically it had a positive EPS up until very recent. That's why basically we can't find this information. Current ratio is way above 1, which means the company has enough liquid assets to pay any current liabilities, which is absolutely fine. They're expecting the earnings to grow about 17% this year, but check out the next 5 years. Every single year they're expecting 58% growth every single year for the next 5 years, which is absolutely huge. We've seen the current price already, $42. Fair value right now, according to Morningstar, about 37. So it's fairly valued according to Morningstar. Now, according to Simply Safe Dividend, it's about 15% undervalued at the moment. Simply Wall Street, undervalued about 15%. $49 per share is where they think. So $7 up from where we are now, right now. And the tip rank is actually saying $42.07. So it's exactly where it is now. 1% upside, strong buy, which is very interesting. And average price from Seeking Alpha is about 41. So it's about downside about 1% or so. And according to them, it is a buy. When it comes to Sharia compliance side of things, absolutely nothing to worry about. And as you expected, okay, this company is diluting your shares, and they will continue doing that because they are still growing. So they will create more shares so they can use that money to reinvest in the business to grow the business. I don't mind when the companies are still on the growth side of things, okay, if they continue doing that for a few more years. But once their business becomes stabilized and, becomes well down and their profitability and so on, then that's when I expect, and they have access cash flow, free cash flow, then that's when I expected this to basically number to start declining. So I'm not going to lie to you, this is a really interesting company. I'm going to keep looking into this company. I want to see what else I can find out about the business, because right now, of course, their product lines, it looks good. They've got a lot of celebrities. Sometimes that's not a good thing because they have to pay a lot of money to these celebrities to kind of promote the product and so on. But based on what I've seen so far, it actually seems decent, and I'm gonna test out the actual shoes. I'm gonna see what they like, and if I'm looking to buy new shoes. So if they're actually decent enough, I will probably buy one. Based on my friend, he actually said it was the best, most comfortable shoes he've ever had. So let's see what happens, inshallah. They really look nice. So what I'm going to do moving forward, okay, this is not financial advice, is of course test the product and see how things go. If the stock comes down, because based on this, I don't think it's really cheap, okay. I would like to see it maybe in 30, 32, 35 or so. And if we see a bit of a pullback, then maybe I will start looking at it, but take this company very seriously and potentially buy a little bit. And again, when I do this type of things, when I invest in small cap companies, I only do about 1% because the downside is quite a lot. Sometimes these companies can easily lose market or something else can happen. Again, I wouldn't be surprised if something like company like Nike, for example, acquires this business, because it's only $14 billion. Okay, so again, a Nike or Adidas or one of these big boys might come and just buy the whole thing. So we'll see what happens. But moving forward, I'm gonna keep an eye on it, and I will share with you guys what I think about it. If I add to the portfolio, inshallah, I will let you know as well. Have a wonderful day. Assalamu Alaikum.